All right, welcome. Today's financial market, it's a totally different beast than it was even a few years ago. It's faster, way more complex, and packed with all these new kinds of risks and, yeah, opportunities. So how does anyone even begin to navigate it all? Let's break down that journey from a simple idea to an actual real-world trade.
So we're going to zero in on one big question here. If you get an idea about the market, how does that actually turn into a real trade in, say, 2026? And look, it's not some kind of magic trick. It's a process, and we're going to walk through exactly how it works step by step. Honestly, the best way to wrap your head around this is to think of it like a journey. Let's just forget all the complicated jargon for a second. We're going to walk through 4 clear, distinct steps that can take you from just a simple observation all the way to making a move in the market. So here's the map. This is our game plan for that journey. First up, we've got to find the signal, that initial spark of an idea. Second, we have to build a smart plan around it. Third, we're going to explore what's really the new frontier of finance. And finally, we'll look at the nuts and bolts of actually making the trade. Okay, let's dive in at step 1. Before you can do anything, you need an idea, right? In the trading world, they call that a signal. It's basically the answer to the question, why should I do anything at all? And these days, there are really 2 main ways people go about finding that answer. On one side, you've got technical analysis. This is the classic approach, all about studying historical charts and patterns to try and guess what might happen next. And on the other side, algorithmic trading, which uses computers and code to automate that whole search for signals, sometimes in fractions of a second. So one is reading history, and the other is trying to write the future. Now, these technical tools, they aren't crystal balls. Think of them more like a toolkit for reading the market's psychology. Things like moving averages can help you spot the direction of a trend, while others, like the RSI or volume, can give you a feel for the market's momentum, its conviction. Each indicator is just a different lens you can look through to try and understand the market's mood. Now, algorithmic trading, that just takes this whole idea to a completely different level. Instead of you or me spotting a pattern, a program does it automatically. The strategies can be pretty simple, like just following a trend, or they can get really complex, like sentiment analysis, which literally scans the news and social media for shifts in public mood. The key thing to get here is that it's machines looking for the exact same signals as humans. They just do it at, lightning speed. All right, so you've got your signal. Great. But one single idea, that's not enough. That's not a strategy. You need a real plan. This next step is all about going from chasing a single trade to building a smart portfolio that can actually manage risk and returns over the long haul. And the bedrock, the absolute foundation for pretty much all modern financial planning, is this thing called modern portfolio theory. The big idea, and it's a Nobel Prize-winning idea, is that you shouldn't just try to pick individual winners. No, the smart money is on building a portfolio where different assets work together to get you the best possible return for the amount of risk you're okay with. And here's the mind-blowing part. By cleverly combining different assets, even risky ones, you can build a portfolio that's actually less risky overall. And this right here, this perfectly illustrates that core idea, diversification. You've heard it a million times. Don't put all your eggs in one basket. By spreading your investments across totally different things, like stocks, bonds, and even newer stuff like crypto, you lower the chance that a bad day in one area is going to torpedo your entire portfolio. Okay, plans in place. Now it's time to get a little adventurous and explore the newest, and you could argue the most disruptive part of the financial world, decentralized finance. You've probably heard of it as DeFi. This is where finance and the internet are colliding in a brand new way. And if you're wondering just how big this frontier is, well, just look at that number. Over $200 billion. That's the value projected to be locked up inside these DeFi systems. Yeah. This is not some tiny niche hobby anymore. It's a massive, growing piece of the global financial puzzle. So what's the big deal with DeFi? Well, one of the biggest straws is this thing called yield farming. You can think of it like earning high interest in a savings account, but with your crypto. And as you can see, the strategies really run the gamut. From lower risk stuff like earning a return on stablecoins all the way to super high risk leveraged plays that can juice your returns, but of course they can also amplify your losses big time. And look, we have to talk about risk. It is so important to understand the dangers out here on the frontier. Because this isn't like your traditional bank. There's usually no safety net, no one to call if things go wrong. A single bug in the code, a smart contract vulnerability, and poof,
Millions of dollars can just disappear in an instant. This is definitely a high-reward space, but you have to know it's also incredibly high risk. So where is all this action happening? Well, mostly on exchanges. And the main difference really boils down to one simple question: who's holding your keys? On a centralized exchange, a CX, the company holds your assets for you. But on a decentralized exchange, a DEX, you hold your own keys. You are always in control. It's that fundamental trade-off between convenience and having total personal responsibility.
All right, we are on the home stretch. We've found our signal, we've built the plan, we've even explored the wild frontier of DeFi. Now we're finally ready for that last step, pushing the button and making the trade. But what actually happens in that moment?
Believe it or not, every single market on the planet, from the New York Stock Exchange to some brand new crypto exchange, it all runs on these four simple ideas. The bid is just the highest price a buyer is willing to pay. The ask is the lowest price a seller is willing to take. And that tiny little gap between them, the spread, that's the engine of all trading. It's like a constant negotiation happening at light speed.
And that powerful engine? Well, it's not the Wild West anymore. There are rules now, big ones. As you can see, governments all over the world are rolling out clear regulations, from MiCA in Europe to new laws in the US. The bottom line is this: regulation has arrived, and it is absolutely shaping what this market is going to look like tomorrow. And that really brings our whole journey full circle. The crazy thing is, access to all these markets, from stocks to DeFi, is more open than it has ever been. The tools are available to pretty much everyone now. So the real question we're left with isn't if you can get in the game anymore. It's how are you going to prepare for it? Thanks for watching.